Hello traders out there in Traderland, D7 here with Grok to trade, and wow, August have regained all of its previous losses this month. Been trading in live markets 27 years using technical analysis. Glad you're with us. I'm going to try to earn a like from you. If so, it doesn't cost you anything to give me a like. But let's look at the markets here. This is the S&P 500. Take a look at this. We had a monster sell-off. This monster sell-off started in July, going into July, August, just deep drops. And then going into the remainder of August, rally up on lower volume. Pretty extended here to the upside at this moment. We did get back above these moving averages. Now, why the big rally? Well, CPI came out this past week, 2.9%. I mean, it's the best we have seen in roughly 3 years, which is very interesting. And everyone's looking at Powell right now, saying, is he going to be cutting rates? It looks like he's going to. Usually that is really good for the markets. Usually that is. But anytime the markets are teetering on a recession, sometimes cuts really scare the market participants, and you'll see a major sell-off. We're going to be watching this next meeting very, very closely because it'll be really quite fascinating to see how the markets digest that news on whatever decision it is that he makes. Okay, now looking at this, we've rallied down, up. I don't have the Fibonacci retracements on this right now, but we are up near the 75 level. So the chances of getting to this low anytime soon has decreased quite a bit. I see consolidations building, a triangle coming in here. Anytime you start bouncing around inside these moving averages that are coiling together, you can get a lot of chop. But guys, people that were getting short here had trouble with this rally coming up. People who had cash, very few people had cash going into this, and if they were fortunate enough to buy down here, are doing really well. Very, very few people are in that boat. I'm just telling you right here. But we have a trend line coming down that I don't have drawn here, but we broke that big rally up. But usually after you have a big rally up, you'll see a drop. And guys, I mean, like I said, for the month, spiders and Qs regained all their losses. Very, very, very interesting. Diamonds, down, up. We're above the moving averages, but look for coiling to commence. Qs, tech stocks, down. Oh, I left the Fibonacci up here on this one. We're at 61.8 on here. So this is an area that if we start to drop, this would be a good area to drop here. A nice bear pullback zone that techs could get weakening fast. However, this news that we could be getting, in the coming week or so could keep this thing chopping higher. We got to watch that. But to buy in long at this moment, after a big extended run to the upside, might be a little dangerous. Down, bear pullback. But woe to us, guys. Do you see, this is the IWM, this is the Russell 2000. See this gap that we have here? We get this up, we get 2 candlesticks. This could be an island top. If we get a gap down on Monday, and this is an island top, look for a sizable sell-off to take place in the markets. Let me go back to spiders. See this gap, guys? If we come down, and there's 2 gaps, a gap going up and a gap coming down, that's called a double open window. If we get that double open window down, that's an island top. Look for this to sell off and aggressively. So that's something that we are watching for. Financials, I like to take a good look at this. We're almost near the highs again. We rallied up. There's our gap. Monday, if we get a big gap down and it stays down, we got a double open window. Look at that as one of those exotic reversal patterns called the abandoned baby. It's kind of the same concept, but wow. I mean, you go up and you get that doji on Thursday. A lot of people were thinking short at this moment. Up, very extended doji, short, and then it rallies up higher. People who are putting on short positions at this moment might be in decent shape. US dollar, US dollar is crashing and burning. We had a falling wedge, usually bullish. So if you look here, Wednesday we started to bounce, Thursday we bounce, and then Friday we come crashing back down. Now that falling wedge is broken to the downside. Unless we come back up, it'd be a wedgy, bullish death hook. If we were to come back and heal itself, then the US dollar could rally and strong. But gold, man, was marking all-time record highs. Look at this, up and away. What does that tell you when gold is popping this strongly? Gold and silver, people rushing into precious metals. Why? Because of the fear of what's out there. A lot of fear. People are going into things that look more stable, and there's a flight to gold at this moment. And I see kind of gold and silver like Bitcoin and Ethereum. A lot of people going into Bitcoin, not so much in Ethereum. A lot of people going into gold, not so much into silver at this moment. Very interesting. See, VIX is below 15. Are you kidding me? This is daily chart on the VIX. Had this spike down, very extended to the downside. We're not relatively in any sort of trouble on relative strength yet. So there's several things that I look at here. Histogram's telling me that there's a good chance of this popping back up here. But I want to take a quick look. Now, have I earned a like? It doesn't cost you anything to give me a like. It doesn't cost you a cent. But here, look at the weekly chart. This is the spider. Do you guys see how we down, up, but we're hitting a major trend line right now? I'm watching that. Histogram, I have a red tick. Do you see that? That's this red tick. And then we flatlined on this one. That's telling me that this thing could be in trouble. Could be in trouble, guys. Relatively kind of high here. Kind of high. If I go to that Qs, this one got up over those trend lines, looking really strong. But look at that red turned into a pink. I like pinks a lot, so that's good. I like that this RVGI is getting ready to turn over to the upside. This is getting ready to turn green down here on the Harsey. The Russell 2000 is at a major trend line right now. That's in trouble area. That could be problem. I don't like the light greens here. This light greens are bad. So I don't like this. Let's see what the financials are going to do. Come on, this is fascinating. Rising wedge, we went down below it, we come back up, and then we closed above that line. We're above this. So this is kind of like a bullish, rising wedge, bullish death hook to the upside that this thing could get nice and bullish. But what's interesting is see how price is going higher here. On the MACD, price is dropping. That's a bearish divergence. RVI dropping, RSI dropping. A lot of bearish divergences in the face of this strength. In other words, this thing should have just fell out of bed, guys. This is so interesting. I've been trading in the live markets 27 years using technical analysis. To see us kind of topping up here in these areas and to see the market start to break down and to see it rally back with such strength is crazy. It is fascinating to see the VIX, at one point was knocking at the door, 60, 50 or something. What was it? And then it comes crashing back down below 15. Are you kidding me? That is amazing. If you let's look at gold here, our dollar first. It's just when that broke, we closed down below it right here. That was back in the beginning of July, and it has just broke down. But gold, look at this. Big rising wedge should have been bearish. It was not. It broke out to the upside, closing at the week's high. Very interesting. Silver, look at this nice bull flag. Like this could be a buy opportunity on the bull flag. And the VIX, again, if you look at this, so we got up over 60. We were up at over 65, it looks like, on the VIX, here in this month. And we're coming back down. So very interesting to see. So, hey, there it is. I always throw my hands up like that because when I'm in editing, it tells me that I'm done with the charts and I can go into my monologue stuff. But, guys, unemployment, inflation, things are a lot more expensive than what they have been. For it to tick lower, very interesting. Reports say that the GDP, 30% of what makes up the GDP right now is government spending. I think that's a train wreck. Smaller government is what we need, not more government. We do not need bigger government. What if the government wasn't spending? What would the GDP be doing right now? Because it shows that the GDP, if you have consecutive drops, says we're in a recession. We have unemployment, the SOM rule, unemployment economic indicator says we're in a recession. We've been watching, which I have not showed you, we've been watching the bond yield inversion, and it hasn't righted itself. It got really close. Hasn't fully righted itself yet. Once it does, basically, that starts the time ticker, because studies show it's about within 100 days that the major drop in the market start to commence. So that's what we are looking for. So all indications show that we are in a recession, but the markets keep trying to go higher. And what we're looking at is how can we exploit this? So the question you have to ask yourself is, do you believe in your heart of hearts that the markets are going to be lower in the next 6, 12, 18 months? Or do you think we're going to keep making highs in the next 6, 12, 18 months? Do you think we have a better chance of the markets dropping going into the next year, or a better chance that the market's going higher the next year? And what's your level of confidence on that? Let me tell you mine. I am more confident that we are going into a recessionary pullback. Why? We're watching technicals, but we're looking at things such as the SOM rule, which already says we're in a recession, looking at things such as unemployment, looking at things such as inflation. It's very interesting to see inflation drop, at the best level that we've seen in 3 years. Very interesting to see that. And looking at the bond yield inversion, and the 10 versus the 2, and to see that inverted deeper than it's ever been inverted and has lasted longer than it ever has. The question is, when it does right itself, does that equate to a bigger and deeper recession? Or what do we make of that? Because we don't know. These are territories that we haven't been in yet. All we do know is the inversion tells us that it's 100% right now of calling these market recessionary pullbacks. It's 100%. SOM rule is batting at 100%, and that's already said we're in a recession. The inversion says we're in a recession. We're just waiting for it to right itself, because that kind of really kicks things off, and it hasn't done that. And we're just looking at overall market conditions, and I think that there's going to be a shoe drop of some sort that's going to be the catalyst to get things going. And I've said this for a while, whenever the Dow gives us a good solid 1,000-day down day, that usually tells us that we have a problem. And I think I need to check on this. We had a 1,000-point down day earlier this month, and I know we had a 600. I'm just thinking, did we get our 1,000? I thought we did. I got to look at that. But usually that's a telltale sign. Once you have 1,000, 1,200, 1,300 point down day in the Dow, that's usually a telltale sign that the high has been put in somewhere. And look for a lot of volatility up and down. You'll get just crazy ups and downs, kind of like what we're seeing right now in the markets. But then it will just start bleeding out. It will have these sharp little drops, but it'll try to rally back. And you got to be careful swing trading that, okay? For you swing traders out there, and especially your 301 mentor students and the 401 mentor students, this is the time to be really careful on swing trading. What I highly recommend, educational purposes only, what I highly recommend is think about the different strategies that we've taught you, and be looking to use some of the more tight stop loss techniques and methodologies that we taught you. So if you do get into these drops and you got a low RSI reading, deploy some of those more aggressive stop loss managements to take profits quicker, okay? You'll want to take those profits very, very quickly. Don't give it too much room to breathe, is what I'm saying. Move that stop to break even quickly. Not so quick that you risk getting whipsawed out of a good trade that in other words would have made you money. Okay, that's a mentor moment. That's me wearing my mentor hat publicly in front of everybody, showing some guidance for everybody to benefit by. So if you made it this far, say made it. You're one of the crazy ones. And you will say made it down in the comments, and only you and I will know what we mean. Okay, but here's the big question. If you had to say in the next 12 months, will we be up or down in the next 12 months from where we're at now? And it'd be interesting to say up a lot or down a lot. I'll give you mine. I think that we will be down a lot 12 months from now. That's what my belief is based off of what I'm seeing right now. And the question is, how do we exploit that? Be short the markets, learn how to be short the markets, learn how to trade these markets, learn how to do this. We can help you, obviously. You look us up. And so here's the thing. Either you can be in cash, but if you're a big dog player in the markets and you don't like the idea of being in cash because of what you're seeing with the US dollar crashing, hey, I get it. Maybe be looking at bonds. Maybe the bond market, but there's concerns with the bond market. I think there are vehicles out there, such as the inverted bear funds, that could give you not only a flight to safety, but an opportunity to potentially make some great profits, okay? So learning how to navigate these waters, because the market takes the stairs up and drops out the window on the way down. There's money to be made in this, but you've got to sit through some chop at the top. Okay, when you're at the top, everyone thinks it's hey, it's a good buy price. They'll get back in and run this thing up, 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 up. So you've got to be patient with the markets for them to finally top out. However, could I be wrong? 100%. Oh man, I absolutely could be wrong. This market could just run up forever. The SOM rule could be wrong for the first time ever. The bond inversion could be wrong for the first time ever. Of course that could happen. Inflation could be a fluke and now drop, and we'll have a 1.7 inflation rate from this point in the next 5 years, maybe. Okay, that seems pie in the sky to me. That doesn't seem feasible or not even plausible, but that would be ignorant for me to say it's not plausible. Definitely plausible. But anyway, the long and short of it is simply this. You got to be careful in this market condition. You've got to tighten up, play a little more aggressive than you've ever traded before. Certainly be sure that you're connected with a group of people who can help guide you the right direction and help you shore up your knowledge with specialized knowledge from training. Get it from somebody. You can get it from us. We're biased. We think we're the best. We're pretty confident we are. Get it from somebody. Get that specialized knowledge to know how to navigate waters, especially now. Because last number of years going up, you could be a monkey throwing darts and make money. Okay? Different ball game now, boys and girls. Different ball game. I've lived through several of these recessionary pullbacks, and they can be a lot of fun if you're on the right side of that. So there's the long and short of it. Hope you guys are well. Did I earn the thumbs up? Come on. And it's the last video for all of you guys who don't subscribe. So if you subscribe, you'll see this again. You have the option to unsubscribe if you don't like the content. But at least if you subscribe, you'll have the opportunity to see our next videos coming up. Hope you do. Love to have you part of the group. Take care, guys. We'll see you later. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you're a trader, you rate you from amateurs to professionals. Mentoring will do that for you. Anyway.